I'm gonna then get on my phone. So let me know when you're on, so I can then turn my phone on and I can tell people in chat. Okay. Okay. Well, I don't know how people can get on if the privacy is not on. You know what I mean? We got to go public for people to just what? Phil, you're breaking up. Now I can. Yeah, we have to go public or people can't see it. I can hear you fine. Oh shoot! I gotta charge my phone. Okay. Yeah, I'm here. I'm just setting up my phone so I can see chat. Can you guys hear me?
Okay, I fixed that. We got sound now. Sorry about that, guys. Okay.
Are you even moving? There you go. Look at you, Phil, man. That nice haircut.
I ditched the hat in honor of the Genesis block anniversary on Bitcoin, January 3rd. Aaron, no, this is not a prank. You should be able to hear.
Yeah. And hold on a second. I'll be right back. This my one dog's gonna start barking because my wife left. Hold on a second.
The thoughts on the ETH fork is that what typically will happen in crypto, and this isn't just a ETH thing, but more in general terms about how things fork, is that you're going to typically see kind of a buy the rumor, sell the news type of move. So what you do is you're gonna, looking for pullbacks right now. But as you get toward the 14th, then what's going to happen is you're going to see probably some sell pressure come in, and that's going to, that's just kind of the nature of the beast when it comes to these forks. You get the initial run up, and then a sell off as you approach the actual fork date. So I think you're still early enough where it's like you can still buy the dip, but as we get closer, I'd be pretty leery about protecting profits at that point. No, unless there's a contingency like there was with Ethereum Classic on a new coin that they decide they want to keep the old code as it is. But at this point, I can see why ETH Classic broke off because they didn't approve of kind of resetting the clock on that DAO hack, or the stealing of the funds because of the kind of the way the DAO was written, right? And so that was a little bit different. This one is like taking kind of the established Ethereum and improving it. I think they have 5 improvement protocols that they're implementing. So this is going to be like the kind of like what everyone's been wanting to have happen. So I don't see that there'd be any reasonable reason to keep a fork of the current code. And as the new code takes off and has all these improvements on it, so I just don't think that that's somebody may try, but I mean you need to have a pretty good contingency of miners in your camp to be able to do that. So
Good. Hey, I'm just setting up some charts here, Phil. So I'm setting up futures up hourly here to talk about that. So we can kind of talk about where things are. Okay. Let me just do something here. It's a little crazy. All right, I'm just gonna go to here. All right. Do you wanna how do you want to bounce it around? Should I talk futures a little bit, stocks a little bit, and then cryptos?
Yeah, let's do that.
Oh, am I muted?
Nope.
Okay, good. Does that sound good? Should I share my screen?
Yeah, go ahead.
Okay.
It's you. All right, we're going to transfer over to Bob, and he's going to talk his stuff. Gold, silver.
Yeah, just a lot of really interesting things happening here right now. I want to give, if you ever hear Phil and I talk about the magic channel, these lines here are between -3.
Bob, I don't see your chart.
I did a share.
Yeah, it's not sharing.
Oh, really? Let me look again. Oh, I have to say yes. Sorry about that. Let me know.
We have a okay. There we go.
I
If
can
you
look on
can,
my
if you want to
screen.
just kill that Trade Genius logo up in the corner there.
Yeah.
Perfect. Okay, looks good.
All right. So when Phil and I talk about the magic channel, this is +3, -3. Those are the black lines. +2, -2, +1, -1, and this is center line. And then this obviously is the slope. You know why these are important is that I think Phil is as well. I won't put words in his mouth, but I'm a big believer in the oscillations in the market. Nothing goes up, nothing goes straight down, because we have two types of algos at work here. We got algos that are pushing it away from the center line, and we have algos that are trying to bring it back in. And so whenever it stretches too far, one algo or the other is going to try to profit from that move and fade it. And these lines here is like when you get here, there's about a 50 or 68% chance that it's going to come in. When you get out to here, you're talking in the 90% range of it coming back in. And when you get out to here, you're pretty stretched and you're going to get a return back. The nice thing about these standard deviation lines is that they're volatility based, so that they recalc every time. In this case, it recalcs every hour, and it's looking back in time, and it's looking at the basically the volatility that's occurring, and then recalculating its spread. So over time, this will give you a good dynamic, picture of where you are. So if it comes down and catches a move, when a lot of times Phil will always talk about, hey, caught the magic channel here, especially when we're trading binary options, is that when it gets down here, you're likely to have a reversal. Like here, you can't see it because it changes all the time, but it touched here, and it'd be a good chance for you to go ahead and take a trade in. What I'm showing you here also is volume profile, and this is showing basically all the volume that occurred at each individual price level over the last 20 days. So this is an hourly look back you like. And so I like to look at this to give me a little bit of a bigger picture. And if you notice here how it works a lot of times, and Phil talks levels a lot, is that you have these really big volume areas. Okay, those are like climbing up a mountain, and then these areas here, this is the peaks. These are the valleys. Price likes to check out these valleys. Okay, and if you noticed here, and I'll zoom in so that you can get a sense, is that you notice price got to here and it rejected it. So when it rejected there's a really good chance, and it rejected it right at a magic channel line too, is that now you look for the next area of support, and that happens to be at the biggest volume area. So if you're trading futures, you can say to yourself, okay, it rejected here. I could be pretty confident it's going to come down to this line here, and then you make your next decision. From a strategic standpoint, we're still above the center line, even though this is falling. Okay, but we're below what they call the point of control. This is the most volume that occurred in the last 20 days. And so unless it starts to retest above this line here, you have to give the benefit of a doubt of a retest of this low. So now we're looking to see have it test the middle line. And once it does that, test down. So I'm still looking for down. And that's one of the reasons why I've been holding SH. I don't think we committed ourselves to I don't think we committed ourselves to a higher move until we know that this line here will hold. So that's the future side. And let me just see if anybody has a question while I'm talking here. It says I'm cutting in and out. Can you hear me okay, Phil? Can you guys hear me okay now? Are you there, Phil? Hello?
Yeah, I can hear you okay, Bob.
Oh, you had me muted. Okay, people are saying I was cutting in and out. So, okay, no, hey Joe, you don't. This is just a standard. It's a standard setting in Thinkorswim. So you just can go into here, and you can edit the studies, and it's a standard deviation. So, and I just have them all set up. So it's really up to you and how you like what you like to trade. I like to have more than less because I like trading the levels. But I want to show you we're still in a downtrend from last month, but this is a pretty big low right here, and we haven't finished testing it. So there's a good chance we're going to come down and test this low, and then if it's successful, then we look for another move higher. If it breaks it, it starts the whole thing over again. Okay, good. And then flipping over to just the stocks in general, I just wanted to show you kind of how I look at the markets, and I created filters so that I don't have to remember everything as I look at. But what's important if you want to be really, really sure that you're in a good trade is there's certain things you want to have happen. You want to make sure this is the 100 period moving average. I like to trade off the 4-hour. To me, it's a long swing. It's really up to you. If you like to trade faster, you could trade it all the way down to the 1 minute if you wanted to. I don't know why you would, but you can. And some guys like to day trade equities, and I would look at the 5 minute for this. But I like the 4-hour. Ideally you want to have the 100-day moving average below your price, and you want to have it actually turning higher. And then once you do that, you want to look at, this is money flow. I talk about this a lot in our training, is that I like to have money flow, and I created signals basically smoothing out moving averages. Yeah, I use Telechart. Telechart is what you really have to use is you know, if you're going to invest in trading, you know, this is, you know, it's $100 a month, but it's worth it, and it could do things that TradingView cannot do. TradingView can do things this can't do. Unfortunately, I wish I could meld the two together, but this gives me really good filters that I then take over to TradingView and then look for other places to place my my trades, and I'll talk about that in a second. But I like the 100 period moving average above, price above, moving higher, and then I like money flow. I like for it to be basically blue over red. My signal cross line is ideal. Okay, not necessary, but ideal depending on what you're trading. If you're trying to trade in and out, you know, trying to add position. And then down here, this is stochastics. And this is something a trader taught me a long time ago, and it's really looking at two different time periods to give you a, basically a dual confirmation. And so I have a fast and I have a slow. And what's ideal for me is that you want to take a trade ideally is when the fast is coming up off the bottom, but the slow stayed above 50. Okay. So the green is fast, the red is slow. And then here it would trigger a signal. And you can modify these depending on how impatient you are. You can go in there and you can change this from 50 to 30. It's pretty cool. It's just algebraic scripts. I could change this to 30 and I could just change this and it'll move my wave runner. Okay, so it depends on what you like to do, and then it'll automatically change my filter for a it'll also change my filter for flashing trades. And then down here is I have these only, and I'm showing you only because I use them in the calculations. I just talked about there's the 100 moving average, and I have a positive slope. Now people use different slopes. A lot of people use the 100 as the bull bear line, and they use the 20 for the slope. Different strokes for different folks, and but it's all in there for you. And then what I do is I created filters, and then I call it the future. What I'm looking for, I can look at the whole market, but why bother? I'm most interested in really three things, and really four things. I'm interested in ag commodities because I think they're going to go into deficit. I'm interested in metals and miners because they're definitely going to rise, as you're seeing now, because the Federal Reserve they're hopelessly unable to keep up with the debt, and they're going to monetize this debt no matter what they tell you. And then obviously there's a new emerging phenomenon that I call the electric future, and that's going to be nuclear, and it's going to be natural gas, and it's going to be electric vehicles. And there's the whole series of metals that go into that: copper, cobalt, uranium, vanadium, and nickel. And so I'm following all the purest plays I can in each of those, and then looking to take opportunities to take shots at those. You haven't seen too many of those trades yet because most of them are still underneath the 100 period moving average, and you're basically counter trend trading them, and a lot of people can't, and so I'm looking for them to come over the 100, and then we'll start trading them more. And you can see it. The trade that I struggle with the most so far is the stock I like the most is FCX. It can't hold a gain for a day, and just because it's not in a bull mode, and it's just unfair for subscribers to get in a trade and the next day have to get right back out again. So I prefer now to just let it get over the 100, and then you can get in a trade. Like if you look at AG, and you can run with the trade for weeks once it climbs over, because then you're going to get institutional investors starting to acquire and add to their positions. So what I do is this is my watch list. I can put as many on there, and I change them in and out all the time. And then here's my confirmed bull, and I'm going to go into that here in a second and show you those trades. And then this is a streamer that's just going to pop up anything that's going to look at the money flow that will start crossing, and I'll make a decision whether I want to take a shot at a trade or not. Like soybean came up, and we took that trade, and then here I also have a signal that shows when I should maybe consider taking profit on a trade that's in a bull mood, and or a bull mode. Now you know why I can't type, I can't speak, and then what you do is you can take the profit, you can take half off, or you just can ignore it depending on what you want to do, or move stops higher. So what I do, I'm constantly looking at the futures and trading view, depending on what I'm most interested in doing at the moment. And then I go ahead and I just go back out to maximize. It's now on that filter, and then I can quickly go through those stocks. And if you can see here, look at this move on First Majestic. It's beautiful. And if you just waited for it to come up off the 100 moving average, And it took it from there. You went from 550 to 635 today, which is a really nice trade. It's 15%, and that's a nice move for any stock, and that's within 3 weeks. And we're going to see a lot of that with the miners over time. And then we have, excuse me, my dog's trying to bother me underneath the table here. Then we have yen. This is why we're having issues with SPY. This is risk off. Now I got to the top of the channel. I forgot to talk about this. So this is a warning flag for me. It broke the channel here, and this is why I started getting worried about the metals and miners, because they start selling the yen off again here. Then it's going to drag the metals and miners down. Everybody should follow FXY. You should have it on your watch list, because this is the one they use to short the metals and miners with. Okay, everybody talks about the dollar, but the yen is the vehicle that they use it for, and also it screws with the cryptos a little bit, and the euro screws with the cryptos too. It's just the funding mechanisms these guys use to short, and they also use it to short oil too, and so that's why oil has been holding up for the last couple of days, because the yen hasn't been pressuring it, and so that's been flashing. Now we're at the top of the channel. I'm looking for a reversal. I'm looking for, hey, we test down on SPY, and then they may start lifting this thing back up again. Or it can just keep running. Who knows? You don't know the future. These are just warning flags. See, GDX is in the channel. We're getting money flow here starting to roll over. This is the thing that worries me. Price has not broken GDX here, and money flow is coming down. And that's why I'm wondering if we're going to start getting a rollover in GDX. GDXJ did break out, broke the channel though, so I'm looking for this to reverse. Okay, and here's SH. I'm in SH. It's coming back into the channel. It's really rare, because of the bull market we've had for 9 years, to get this on a full-on bull. Okay, but it's just been a nice trading mechanism. And what I tell people is that, look, if you have a long position or a long portfolio, that I would absolutely recommend that you keep some SH calls in your portfolio, even if you lose money on them. Because look what happened today. I mean, this thing dropped like a stone. Look what happened last week before Christmas. Drops like a stone. You just don't know when the rug is going to be pulled. And this political environment we're in right now is just supercharged. And you don't know when China is going to go blow sky high. And so you want to have a hedge, or you need to get and raise more cash. And then look what's showing up. This is my list today. I mean, this is all risk off. Okay, TLT is moving higher, and VXX. So I just think it's fascinating. I don't make this stuff up. This is what's all showing up as being in confirmed bull mode, and now it could be the end of these moves, but that's pretty bearish. Metals up, yen up, bonds up, volatility up, and stock market down. So anyway, that's what I do, and that's what works. And then what I do is, once I get these signals, they actually will sends me a text personally or an email, and then I go ahead and I evaluate whether I want to go send those on to who's subscribing. And then if you look at GG here, I'll show you the other signal. It flashed it's in a bull mode, but then it flashed a sell signal here. If you're in the trade and you want to take profit on GG, it's up to you. And but it broke the 100. So, some people are longer term horizon. You may want to stay with it until it actually closes below the 100 period moving average again. So I just wanted to share that, Phil. I don't know if anybody has any questions. I'll look at the questions here. That's too funny, Dan. Yeah, they come underneath the table and then they want to be petted, or they bark. And usually when I'm doing a video. Oh, the channel I'm using, it's just an envelope channel, and the settings are, and you can widen these settings out. So it's a 2% width, and depending on what you want to trade, you can do whatever you want with these. I prefer linear regression. I'm shocked that Telecharts does not offer linear regression. And so I'm actually going to go to their training, and I've been using them for almost 30 years. And first time I'm going to attend their training and ask them to show me how to do the math, so I can build linear regression into my filters here, because then it'll take our signals to the next level. And we do that with TradingView gives us that, but you can't calc on it. So that's why we created different signals in TradingView. So do you want to add anything?
Not in regards to.
Yeah, hold on.
What's that?
Yeah, I sorry to cut you off. Somebody asked about the gold and silver ETFs.
Go ahead.
Yeah, I just brought them up. They look pretty. They look pretty good. So, I would, if you're in them, if it pushes up above 124, I may consider taking profit. But it's channeling nicely, and we have money flow that's actually resetting on high that may push back higher again. So, gold looks good if you have a longer term time horizon just to stay with it. And then SLV is getting a little pricey. It's tough hitting the top of that channel. But the thing with silver, it's been suppressed for so long that it could just blow right through. So I'm kind of using this kind of as more of a barometer on whether or not I should consider bailing out of a silver position. But if you're just a channel trader, you may want to take some profit here, but for sure silver is going to go. My view is, and some of you guys listen to me doing any of my interviews, I think silver is going to go into the 60s and 70s on this next bull move. So, if you don't want to get bounced out for a dollar or two, that's depending on your time horizon. But if you may want to take some profit here and let it reset. Oh, that's good, Ken. Let's see here. Any other questions? I think that's it. I'm sorry, Phil. Go ahead if you want to jump in.
No, I mean, I think you've been calling this cyclical move on this stuff for a while now, and it was pretty spot on. I think because we had been talking since October about how things were getting toppy in the market, and we were getting some major bearish divergences, and we had kind of rung that bell on some of the videos back then. So, and then you said started preaching the whole commodity space, and you were just really spot on with that timing wise. So obviously what you're doing in the room, I've been watching, because I'm more on the crypto and binary side, but watching, you guys are really doing well. So if you guys are watching and you guys are wondering, you got your E-Trade or Schwab accounts, whatever it is, Thinkorswim, Bob gives you pretty clear-cut entries and exits, and the hit rate's been pretty good on those, really good actually. So you may, if you've been on the fence, you may want to pull the trigger and get in on that room's action, because it's pretty busy. You got entries every other day.
Yeah, I forget to turn it off some mornings, and it's at 3 o'clock in the morning. I'm starting to get dings. So, yeah. So I pulled back to the daily. Something changed at the end of August. I talked about this before. This gap down seemed to have been the end of the silver move down, and it's never really. It double tested it here, in November, and from there it's just been a grind higher. And I don't think it's going to look back. I think with the interest rates going higher with the Fed, and with the banks being in trouble, and with the asset purchases being pulled back, the banks are losing their casino chips to short, so they have to close these short books off. And I think that's we're seeing some of that right here, and that they're going to. That's why SPY goes down and gold goes up, and that's why it's a natural hedge. And for whatever reason, they've been shorting the yen. So we could blame the Japanese, but it may not be the Japanese at all. It may have been the banks the whole time doing anything. No surprise to me. They just do whatever they need to do to push money their direction. and now that it costs more money and they have less of it, you're seeing the yen popping, you're seeing silver and gold popping, and then you're seeing the stock markets struggle. And people have been asking about oil too. I don't know if anybody else is interested, but I think oil has much further to fall, and so we may be getting these dead cat bounces here. And let me go into the futures here and go to daily, and I just want to show you. Let me go to weekly because I think it'll give you a better look. Is and this is a problem. My mother-in-law is a huge energy. She used to be an energy trader, but she's an energy investor. She loves the divvies, and she was asking me, you know, whether or not we should pull out. I'm always reluctant to tell her what to do, but she she's made a lot of money, you know, trading and just dividend reinvesting. But I want to show you oil here. Let me go over there real quick because I think it's important because as oil goes, I think the market goes. Okay, and so we had these moves before. Okay, and now we've fallen now below the highest volume area by price right here at 50. Okay, we gone down to 26 before, and I think we're going to go down and at least test this area here. Now I'll probably be a buyer here, and this is probably where I'll put my 401k money back in because I think this will start to move and then capture dividends. But we can literally. I don't think we're gonna get down to $11, but you got to realize that the whole pricing mechanism on oil is artificial, and it's the same thing they do with everything else they do. Is that they use the futures contracts to and then they hold oil off the market. But now with the U.S. producing domestically so much oil, we don't have to put it on barges. You know, these guys are pumping it and selling it, and what's happening now is that it's blowing up that trade, and that's why you're seeing this. And the U.S. producers are profitable into the high 30s, low 40s. Don't listen to any of the narrative. You know, there's some of these guys, and you got to realize too, they're pulling natural gas out of the same pipe, essentially for free. So you know, and they could sell LNG now at $6 a million cubic foot. Okay, where it's $3 here in the U.S., you know, because Europe's so expensive. So they're counterbalancing, maybe losing money on oil, and they're capturing it on natural gas. So this move can come down much further. And so this probably is a dead cat bounce before we get lower, even if the dollar struggles, you know, and starts to go higher, lower, is that we'll still probably see oil come down before it lifts off as an inflation hedge. You know, hey Tim, I don't like trading long the excuse me. I don't like trading long the leverage ETFs because I don't think people are smart enough in general to make it. They don't stick around on the trades, and the chop will kill you. I rather short them with the ones that offer puts. But if you like silver, you know, and you want to do leverage, definitely do leverage. But once it starts going against you, you better get out because it could absolutely punish you. You know, here's the one I'll show you. Let's see here. No, wrong one. Dog. Where is? Oh, here it is. Here's TNA. Okay, so it went from 90 and it went all the way down to 30. So, and so we have, you know, you'd have lost 60, 70% of your move, and a lot of people get frozen. You know, it'll come back up, and then you get this move, and you get satisfied, and you go back down again. Is that I rather short TNA when you get a sell signal right here, buy puts, okay, and then write it down for 2 or 3 weeks. You'd have made a fortune, okay. So that's my view. Yeah, I don't like the spreads either. even SH is not even leveraged, and it had 20-cent spreads. I mean, that's just ridiculous. So anyway, hey, I monologued enough, Phil. I'll hold the floor back. If anybody have any questions for me before I jump into crypto? Yeah, ags. I'm sorry, Phil. I'm gonna do it again. I'm just seeing these questions. Sorry.
Yeah, no worries.
So here's ags. So soybean hit the bottom of the channel, came back in. I trade on a 4 hour. It's going to do well. The Chinese have depleted their entire reserves in this trade war with us. Now they're buying from the Brazilians, and we're selling to the Brazilian, but we're going to go direct again. And this is the period, January to March, usually get a nice bounce before they hammer it into the summertime and you get another bounce. But it looks pretty good. And we have a little bit of a profitable trade on. If you wanted to hop out, I put a 1640 stop underneath, if just to guarantee profit. And then here's corn. Corn looks good, bounced off the bottom of the channel. The nice thing about the ags, they don't move that much. If you like to play something that's the home version of trading, the ags are a little bit more tame. And then here's wheat. Wheat's bouncing off its bottom too, and then the last one here is DBA. So DBA it has a combination of livestock and stuff in it too. So, and then Boris comes off. I'm Boris's personal stock analyst, and here's SPX. So yeah, I don't like it. So anyway, I think I'm done yakking here, Phil. So I'll turn it over to you and get a drink of water here, and then and if you guys have any more questions, I'll circle back at the end and answer them. I hope this was helpful.
Okay. So what we're gonna do is we're gonna slide over to my charts here.
Yeah, let me unshare here.
So
am I off?
So guys, real quickly, yeah, you're good, Bob. So real quickly, I've had questions about the binary options and stuff like that, so I wanted to kind of point that out. And currently what I'm showing you is a Nadex screen, and we have a trade on because we got a signal. And so what we do is we'll pick a strike. This is currently in the 6 to 8 p.m. strike and on the euro. So we'll pick a strike, and what we're doing is we're buying that strike because our algorithm says that there's a high probability that we're going to see that price close true, which means closing above this price level here. So as long as by 8 p.m. price is above 1386, then we capture the premium. So premium capture on this was some got at 85. I averaged about 83 on 15 contracts.
Phil, we can't see your screen. People are tired of looking at me.
All right, let's start over.
Phil is tiny.
Let's start over. All right, guys. So this is
yes.
So again, this is the binary options.
Yes, he is Crypto Glass.
The binary options, just so you guys are understanding. So our record is 132.8 since we started it at Trade Genius. The system actually has a higher win-loss ratio than that, but we just recorded based on officially bringing it over to Trade Genius. But what we're doing is we're buying strikes. Nadex allows you to buy a strike level, and as long as you close above that strike level, you win that trade basically. So it's a little unlike forex trading or futures trading. It's like you're playing levels. So as you can see here, off the signal that we sent out a little while ago, official signal, this one's already in the profit quite a bit here. But our probabilities basically say, look, this strike level should not be violated, or very low probabilities of it being violated. And if the chart is cooperating and the environment is cooperating, then we'll send off the signal as an official signal. We're pretty conservative. It's more quality over quantity, but that's how come we get those really high winners to loser ratios. And then we're looking to at least get about $15 of premium capture. So for every $100 that you're putting up. So that's 15% back on every $100 that you're risking on those. So those have worked really well. I've had a lot of really good feedback from last year on that. As far as people really growing small accounts to big. And that's what Nadex can do if you have a really high probability strategy. So you can start off with very little with Nadex, as little as 200, but we recommend at least, you should have somewhere in the vicinity of about probably $500 of capital per contract that you want to trade, just so that you have room if there's ever a drawdown, which occasionally we'll get them, but they're pretty few and far between. So you just don't want to get whacked right off the gate and have to refund. So, but that's, people will start off with 500 or less, or up to $1,000, but a lot of good growth rate from small account sizes like that. So anyway, just wanted to kind of explain that, how we do that. Again, we're picking strikes that are going to have high probability and that are going to see some premium that we can get. We want to get about $15 or so, and then write them out. And and the holds will be anywhere from 4 hours to under an hour. Just really depends on the situation.
You're breaking up, Phil.
How's the audio? Any questions on that, guys?
You cut out for like 5 to 10 seconds.
Okay. All right. Well, that's okay. If there's no questions on the binary option side, what we'll do is we'll swing over to Bitcoin. And, basically Bitcoin has trying to put in this inverted head and shoulders here. And so there's been a big battle. I think this area that's shaded here is going to be somewhat of formidable resistance. It's kind of already has been. And right now we're just kind of battling in this area of the support and resistance in this area is pretty tight. So it'll probably break. If this head and shoulders plays out, we should see this thing start to grind back up and break up. One thing you need to keep in mind is that as we get into the Asian session, which is coming upon us, sometimes we see a little bit of a bearish reaction. I've been noticing that as a trend, just so keep that in your up your sleeve when you're trading Bitcoin when the Asian markets open. And if you don't know when the markets do open, you can always go to 24hourmarketclock.com, which is this site here. And it basically shows you at any given time when the markets are open. All right, so this is Eastern time, and you'll see that here at the top of the hour we'll get into the Japanese session. And so when those sessions open, Japan, Europe, also the closing times with Europe and the American opening session, those can be a little areas of volatility. So that's just kind of a tip if you guys are doing smaller, quick swing trades, just to be aware of those times. But you can use this this website to kind of keep track, and it takes into account daylight savings and all that stuff. So it makes it a little more manageable to figure out what's going on with time differences and things like that. But as far as Bitcoin goes as a whole, this is a lot of people. Here's the thing with the, is the bottom in, is the bottom in? No one knows. And what we have to go off of is, basically how does price and volume look? This is kind of sort of setting up for, like I said, it's an inverted head and shoulders. So that's a well-known bottom formation. However, this right shoulder needs to maintain this structure here. Okay. And then we really do need to see a move up to this neckline and then a break of this neckline. And then what'll happen is you'll get a measured move, which is this distance here. And so you'll be expecting to see that, which is going to take us coincidentally right up to this larger trend line. So I think that would probably be, as far as this cycle goes, would be the top side of this move. We are in a bearish market with Bitcoin. We don't really care because we're traders, and there will be we'll get into the cycle where we can really then see like your hold portfolio, your HODL portfolio start to grow again. Make no mistake, people are accumulating at these levels, and the bigger players are accumulating at these levels. There's a lot of over-the-counter transactions that are going on, and those over-the-counter transactions are largely big block purchases, right? So they're talking like minimum size of 100 Bitcoin on up to like 1,000 plus. So big transaction sizes, and those are longer term type positions for getting into the crypto space. And the reason for that, excuse me, is you take a look at the chart, lifetime chart. This is the BLX symbol for Bitcoin on TradingView, and this gives you the basically as much of the charting as far back as 2010 that they can muster. And but you see this big and this is a logarithmic scale, so it kind of scales the moves up, but you can see, I mean, this is a raging bull market, and as you can see, we're in another period of where we have these pullbacks that we get in Bitcoin. And yes, even though now we're 10 years into from when it was first created, we're still seeing this market structure maintain these types of volatile moves. And a lot of it, guys, is just because Bitcoin is so finite that it does have still inefficiencies in the pricing. So you get a lot of, that's why the returns have been so insane, and so have been the pullbacks, right? So and it'll take time. I mean, right now I think the figure is something like 3% of the global population transacted or has transacted with Bitcoin, which is minute, right? So the growth potential here for people using it as store of value, socking it away into their portfolios, I mean, just really hasn't even been tapped into. So every time we get these pullbacks, excuse me, every time we get these pullbacks, you kind of get the same sentiment where, the ride's over and, Bitcoin's dead. That's why I highlighted these areas in these circular areas, because this is the kind of price action that you typically will see. And then all of a sudden, before anyone realizes it, the bottom's in. So, is the bottom in here? Well, that it could retest these lows again and eke out another low. I mean, if you look at some of the quarterly charts, that's kind of what it's showing us. But again, we're looking at logical levels of resistance and support. But this line here is the halving. These vertical lines are the previous halving events, right? And so as price starts to, or as time starts to get toward these levels or these areas of halving, you see that the bottom kind of, the whole pullback cycle ends, and you start marching back up toward these halving events. And then after the halving event, you get these really pretty enormous bull runs. So here we are. We're getting into the vicinity now, like it was back in the 2014, 2015 corrective cycle, where we're getting into that same vicinity now with this halving event, which is going to be, as it stands now, about May 2020. And so that's where you kind of have to start looking at how price reacts as we start, because this is a deflationary thing, right? We go from 12.5 Bitcoin reward to 6.25 Bitcoin reward on every block that is mined. So that's half the turnover onto the market. Excuse me while I take a drink.
Yeah, hey, Phil's fighting a cold here, guys. But is it just me, Phil, that you're breaking up, or are you breaking up with everybody else? Can you guys hear Phil okay? I forget how long the delays are here. So
okay. Sound is fine. Me. Great. Okay. So anyway, back to what I was saying here. So yeah. So what you have to be cognizant of is is regardless. See, if anybody was fretting in these previous spots down here of is the bottom in,
Live. Oh,
would have
can you
missed
take
out
Molly in the
on
living room?
these
She
enormous,
was
enormous
barking, and I couldn't have her bark.
rounded bottoms and um, moves, subsequent moves
No,
up
she's
is what I'm
not.
trying to say. So it becomes a matter of not so much having to pick the bottom or worrying if the bottom's in, but if you've, let's just say if it moves back down
They
and
hear you, honey.
gets to 3K, but then we start marching back up, and then our next cycle top takes us over to like over 50, $60,000. It just doesn't really matter. But that's an entirely different, that's a buy and hold strategy. So historically, you're just going off of the fact that when you get these deep pullbacks and you're down into the minus 80 percentile plus, the deeper one was back in the early ones, of course, because 2011, 2012 was pretty inefficient markets, and you had like a 93% pullback. But market's a little bit different now. It's more liquid. I wouldn't say it's totally efficient yet, just because of the finite nature and just the participants aren't the number of participants. We haven't really come close to reaching where this is going to be at yet, but that's going to provide us with the largest returns. So this era that we're in right now is going to provide us the largest returns. So we go from periods of where the buy and hold is good, and then go through periods where you really want to be trading in and out of it. So that's this is a trading environment now, and then we'll be sliding into a more of like, okay, time to start accumulating. But again, that's like a 12 or a 24 month like horizon at least on the next cycle up.
Good. Hey, Phil, could you maybe address a little bit, if you're going to get to it, just say I'll get to it. The kind of like the methodology that we're currently using to when to take the buy signal and when to ignore the buy signal.
Yeah. So let me go to.
When he does that, hey Dan, for me, anything that I discuss is really a trade. And from the ETF side, everything I do is designed around trades that are 2 to 3 weeks or less. Unless I call them a lotto trade, then I may hold them for 6 months to the year looking for a double or a triple or just a huge spike and then hop off. Anything that's really like portfolio related, like anything in like 401ks or IRAs that you're going to sit in for a long period of time. I really don't address those in the service. I'll talk about them, but I don't really signal those. That helps. And I think Phil probably does the same on the crypto side. So I'm not sure if Phil wants to address that also. I mean, Phil hodls a lot of stuff, but he talks a lot of trades, so he's always adding to his stack of cryptos. And then binary options, by their nature, you only rent them for the day or the hour of the week, and occasionally some are monthly. Did that help? Go ahead, Phil. I'm sorry. I just want you to get ready while I ask the question.
Okay, so when it comes to the let's say the moneymaker signal, for example, what you want to do is you want to some people, there's a couple approaches that you can take and I'm talking about, this is now like the discretionary trades that you want to take on your own. You could be super conservative and say you only want to take a trade when the linear regression channel is trending up. If that's the case, you got kind of a downtrending linear regression, and I'm talking on a 4-hour chart, but it really can apply to other time frames. Just know that when you get down to like the really small time frames, the signal can get a bit noisy, but that's true for all indicators. We designed the indicator to be where the moneymaker is kind of a momentum type indicator, so it's going to look for a surge in volume, and that's when it's going to want to fire. So ideally you would get them to fire when you see them down in the lower part of the linear regression channel. Um, and we could look at something else like, say, BNB, BTC. See if we can get. So, for example, down here, you see this moneymaker buy, and that's a nice spot to get it. It's the lower half of the channel, and then it runs back up. And what we like to do is we'll like to target the other end of the channel on that. And so those are that's like kind of an ideal entry. And what's nice about that is you kind of have a bottom that was put in, so it's easy to be able to see where your stop needs to be. And then, as with all of these trades, when the move starts to go in your favor, basically what we try to do is minimize our risk, right? So you're gonna start moving up your stop or take it to break even, because if you take care of the risk exposure, then your setups will take care of the profits. And so if you don't, if you're leaving your stops out there, anything can happen. If Bitcoin catches a cold, then the cryptos will roll over, and you just don't want to be caught where you had good momentum, something happens in the market, and then you go back all the way down to your stop that you had. You're better off to take to move your stop up and mitigate your risk that you have on. Excuse me. Sorry, scratchy throat. But that's that's an example. This also does work on the smaller time frames. If you didn't like 4 hours too boring for you, you could go to 2 hour. And again, you're looking for areas where it's going to fire, and lower parts of the linear regression channel. Now the linear regression channel moves around, but basically, like, if we were back in this area here, you would see the linear regression channel would be like, this would be a linear regression channel buy, this would be a linear regression channel buy. So, that's the kind of stuff, those are the areas that we're looking for when these things pull back down. And so, basically, that's like the real basic, naked approach to it. Now you can do other things too, like you can say you want to throw support and resistance lines. You could certainly do that. So for example, if you're looking at the chart, and you want to see like there's a support and resistance line, right? Because price bounced its head out and this level broke out, pulled back to it. Then you get a moneymaker buy. You can set your stop below that price level, and then price moves up, surges up, and more than likely probably hit the top of the linear regression channel on that move up there, and you take your profits. And the reason why you take your profits at the top of the linear regression channel is because that's just the easiest way for people to recognize overbought, oversold conditions visually, because that linear regression channel is dynamic. It moves with price, and it will expand and contract according to relative price action. So a lot of times when you hit that channel, you will see price exhaustion and then a move back down. And sometimes, you will see, sometimes it'll spike way up. Like this move here obviously was a big spike up. That would have poked its head way outside the linear regression channel. And that sometimes does happen, but more often than not, you're going to get these smaller gyrations. And that's really what you want. You want to get those base hits. And sometimes what you can do too is you can take some off there and leave some on in case you do catch a runner like that. But I would probably try to take majority of the position off at that point. And if you do leave a little bit on, then just move your stop up or trail your stop up. And because if they are very strong moves, what you'll tend to see happen is they'll stay above this momentum line here, which is we use a weighted moving average of 20. But you'll see price stay above that, and then once it breaks that, so you could use something like that. That's a really good way to trail a stop up on a very strong move. So anyway, that's what we do. If you guys are ability to short things, I'm gonna go to BTC USD again. The ability to short things, then you can take also the sell signals, right? And like here we got a sell signal, an upper part of the channel, and then on the subsequent move down. But a lot of you are just buying long only, and so we prefer these on the we prefer them for most people on the long side and on the 4 hour. But you can tweak the settings to your liking. So if you guys are bored, you like to see how it performs on different settings. These Moneymaker has different settings that you can adjust, and so you can take those and adjust those, and you can make it fire faster or slower. Um, the trade-offs are just that the general rule of thumb is if you're gonna make it fire faster, you may get more false positives. Okay, but it's something that you can play around with and find a setting that you're comfortable with. Otherwise, if you're just starting out, then you can go ahead, take a look at the linear regression channel, put that on your chart, load the Moneymaker, and then look for those signals in the lower half of the channel.
Yeah, hey, Phil, people had a couple questions. One is about trading XRP, and then also, do we use some sort of crossover strategy? I don't. You know, price consolidates more than it moves, and crossover strategies could just chop you to death. And the and then they asked about the slingshot signal, and then Gary, I'll answer your question too. Is that, yeah, just because I don't like Ripple and Stellar from a philosophical point of view, they're not illegal, so I absolutely will trade them because the average true range of them are superior to Bitcoin. And over the Christmas holidays, I was telling Phil I just set it for 3 minutes, and one day I just sat there 6 hours and took trades, 1% trades. I think I had 27 of them. So you can make a lot of money trading Ripple and Stellar on 3 minute indicator, and just using the buy signals and the linear regression line. So, but from a long-term perspective, I think Ripple is the Trojan horse, that they're going to try to make the centralized crypto versus a decentralized coin for people who don't believe the bank should be in the middle of our life.
Yeah, I mean, as far as Ripple goes, right? I think fundamentally it's goes against the ethos of Bitcoin, and because it's not a decentralized thing. The whole magic with Bitcoin, right, is that it's decentralized, right? So that's the that's why it caught on. You're basically claiming monetary sovereignty. Bitcoin or Ripple is a payment, basically a payment processing thing for interbank transactions, and they have a pretty powerful group that's behind them, and again, like Bob says, I think it's perfect. I think there's a lot of trading opportunities with it. I mean, when you're looking at swing trading, you're like taking the base hits, the singles and the doubles. You just want volatility, really. You just want movement. So the more the stock or the crypto moves, then the more opportunity you have to catch an entry and then have some movement that you can gain profit from. So, I don't Ripple. I mean, Ripple is not something that I would like cherish and long term hold. I don't think, because there's a central authority in charge of the supply, and there's a ton of supply too. So until we kind of really see what role Ripple plays longer term, I think it's highly speculative. So again, as far as the Ripple outlook goes, I think that by and large, along with a lot of the altcoins, you're seeing similar price movements to the king Bitcoin, right? So I think you get little periods here and there where they may outperform. Ripple's one of the few that I think has the capability of breaking away from the correlation a little bit, but just keep in mind that by and large it's going to mimic the Bitcoin moves, and by and large I think it's more of a speculative play right now, until, like I said, we can see what's going on. There's just so much float out there as far as the sheer amount of tokens that you just have to keep that in mind. If and things fall out of favor too. So if the volatility dries up, you could see this thing start to do kind of like a slow dribble again, and that's not just for Ripple. That's for a lot of alts too. So as long as the volatility stays up, I don't see any problem in getting in and getting out on some of these swing setups.
Yeah, and the only thing is that I'll add to that is I think I'm preaching to the choir in this group here is that I just have to look what they did to um, I forget who that guy is on YouTube that they basically the bank shut down his ability to collect subscription or to collect um, Patreon money or PayPal money, and because it requires permission where Bitcoin once it gets established or in another cryptocurrency, if the ecosystem becomes more mainstream, is that it's permissionless. We don't have to rely on Silicon Valley to prove our what they define as hate. So I think you'll see as things start sliding down further into fourth turning, I think you'll see more and more people go to these permissionless type of monetary events. Now, the day trading money machine or the money maker versus a slingshot, the money maker is as Phil described it, it's a momentum oscillator. And what we're looking for is for that oscillation to get to an extreme away from the norm, and it gives you a high probability setup as it moves back in. The slingshot is and I'll give an analogy from my Marine Corps days, is that we were always told, don't outrun your artillery, when you're in the infantry. And so what happens a lot of times is an algo or a trader they'll get exuberant and they'll push price farther and faster than a normal setup would dictate. And those usually are met with an algo that's going to reverse that hard and basically catch people offside. So that's the slingshot. And we derived the slingshot from what we use in our futures trading. And it's a beautiful signal, and it puts you on the right side of the trade. And so that's the difference between the two that we use. I don't know, Phil, if you want to add for that or if you think I covered that.
No, yeah, that's right. I mean, here's a 4-hour chart of Ethereum dollar, and you had a slingshot fire first. You can use them. I have them both up personally, but you can use them both. It fired actually right at the bottom of the channel, which is great. I love those setups. And then it was followed by a moneymaker signal. Again, it's still in the bottom of the channel. And then those subsequently moved up, and then you got a nice sell signal there. So depending on your strategy, you could close the trade there or just trail up your stop pretty tight. As far as the ETH outlook price-wise goes, I'm eyeballing this 140 level of it broke above the resistance here and has yet to really test that. So I'm looking for a probe of that and then another bounce higher. As I was saying earlier, I think that as you are in the days leading up to a fork, typically you're going to see bullish price action. And you see that with everything, all the Bcash splits, things of that nature. And so, this isn't a contentious fork or anything like that, but it's just market psychology. I don't think there's going to be a split of anything. So some people might be banking on that there's a split, but I don't think there's going to be off of this one, just because the amount of improvements that we have coming on this Ethereum upgrade kind of would make holding on to the current code kind of inferior. So anyway, I'm looking for the 140 area to pull back to, and then we'll see if we get another bounce. And what that would, if that does bounce, what I'd be looking at, guys, is a fib retrace, or a fib extension, I should say. Would be taking us to the 164 area. And I actually think that's pretty doable just based on volume profile. Because, let me zoom out here. There's a volume void, right? So if you look at the volume profile, now we're getting up in this area where there's a volume void. And actually, the next area of price resistance would be this spot here, 170, 175. But I don't know if we will have enough time before the split or the hard fork. Because again, I think once that date approaches, I think it's going to be a buy the rumor, sell the news type event. But if this thing got really, really volatile and it got passed into this 175 and broke above it, you don't have a lot of price action until you get back above these old resistance levels. So this would be the equivalent of that 6K level in Bitcoin. So I think Bitcoin would probably have to participate too in some ways to help get the price going that high. Um, but again, Ethereum's moved up with Bitcoin, but the structure on Ethereum looks a lot more bullish than Bitcoin does right now. So, and percentage wise has been superior than Bitcoin on this bottom. So, I think that's the current outlook I have on it.
Hello.
Yeah.
I lost you there for a second.
So so yeah, that's kind of the outlook here so far.
Okay, yeah. So last thing I want to show people is that the somebody asked about tomorrow, and let me show you where I think the market's going to go tomorrow. Let me get the screen up. Let's see here. Where is it here? Okay. Okay, so here's my trading view. Let me know when you see it.
Yeah.
I see me.
Yep.
Did it come up?
Yep.
Okay. So so this is the fib lines of this move, and I'm thinking we're going to come down and test this 2400 area right here, 2395, and I think Powell. I don't know. Depend on I guess what the market does tomorrow. Is that a lot of people have been lifting gold and silver up, waiting for the move higher. Um, I mean, for him to be dovish. And I don't know if he's going to be how dovish he's going to be. I think if he's going to act dovishly, he'll probably act hawkishly tomorrow. So I'm looking for a move down to here at 23.95, and then have it. I think it's going to bounce off of here, and if it doesn't, we're going to come down and we're going to test this low right here again. So that's kind of my view. And you guys have any other final questions for us? So we can wrap it up here. And then we'll, I don't know which got the delays. I guess my talking is delayed. Let me see here. All right, well, why don't we wrap it up? Yeah, we're going to do this again, Joe, on the 17th.
Bob, will that be the interval going forward?
Yeah, I think so, Phil.
Okay.
So look at that every other Thursday. We're going to try to be as consistent as we can.
Gary, which trade deals are you talking about? If it's cryptos, yeah, I mean they'll work whenever. You just have to be cognizant of the alert comes in to be able to take the trade. Nadex trades are typically going to be more in the evening time Eastern Standard, so it might be late for you if you're in UK. But unless you're a night owl, then typically we'll target the 7 p.m. expirations and occasionally some later ones like 8 p.m. Hope that helps.
Well, good. Well, hey, thanks, guys. If you like it, hit like on the YouTube. That helps us get some visibility. And I really appreciate you guys staying on for so long. Thank you.
All right, guys. Take care. Bye.